All right, beta, let's start. So we did the concept of simple interest and compound interest, but the other day I spoke about the basics of time value of money, purchasing power of money. Under simple interest, I said that interest is always calculated on the original principal, irrespective of the amount beta that is accumulated. Under compound interest, guys, interest is always calculated on the accumulated balance, which includes interest till the end of the previous period. So to compute that accumulated balance, we're going to write principal amount into 1 plus r percentage whole power n. Now after that beta, we've learned about computation of present values, which is the amount of deposit that is required to receive a certain sum of money, guys, on a later date. All right, to compute that present value, you will use the same formula of accumulated balance, replace p, which is the amount of principal beta, with present value. So you will write present value is equal to accumulated balance divided by 1 plus r whole power n. We did the concept of present value factor after that, guys, which is basically the present value of 1 rupee that is receivable on a later date. To compute that present value factor, you will take accumulated balance as 1 rupee, guys, and then recompute the present value. Someone may have a green t-shirt. What's your name? Shresht, sir. Only Shresht? Yeah. First day? You were there yesterday also? Achha. You were so lost yesterday also? No. What are you thinking about, beta? Sesha? Nothing. He was looking at someone and thinking, I thought Sesha it must be. You know him? Shresht? No. Alright, guys. I'm not the matchmaker, beta, but huh. So you will write, guys, accumulated balance as 1 rupee and then recompute the present value. So that will be 1 divided by 1 plus r whole power n. That was the last thing that we did yesterday. Correct? Let the next writing, guys, annuity. Shresht, what is annuity, beta? Is he your friend? Why do you talk like him? ऐसे कुछ है क्या कि सेम टोन में बात करना है बोल के? तू एक बार बात कर अभी. Spot the difference, guys. बात कर यार. What is annuity? Alright, guys. Annuity is a series of cash flows where the cash flow remains constant and the time gap between two cash flows also remains constant. It is not, abhi tak jo bhi kar rahe the, it was single cash flow. Now we are talking about a series of cash flows. If you're receiving the same amount of cash flow at constant intervals of time, it will become a case of annuity. Or if you are paying the same amount of cash flow at constant intervals of time, doesn't matter whether you're at the receiving end or at the paying end as such, but the cash flow should remain same and the time gap between two cash flows also should remain same. We did an example yesterday, guys, wherein we were computing present value of different cash flows. याद है कुछ तो पढ़ाते समय बोला था 10 lakhs, 15 lakhs, 20 lakhs, 25 lakhs. Let's say you're receiving 10 lakhs in the first year, 15 lakhs in the second year, 20 lakhs in the third year, and 25 in the fourth year. Now the time gap between two cash flows is the same, but the amount of cash flow is not the same. When the amount of cash flow is not the same, it cannot be considered as annuity. Are we clear about this? Karman, मैं देख रहा हूँ गधे देखो. My God, this kids. सबको बोलूँ क्या कर रहा था तू? यार बोलने में शर्म आएगी मेरे को. So guys, the cash flow should remain same and the amount time gap between two cash flows also should remain same. So in case beta, in the same question, if the cash flow every year remains at say 5 lakh rupees, you're going to receive 5 lakhs over a period every year, guys, over the next 4 years. Then will this become a case of annuity? Yes, because the cash flow is remaining constant and the time gap between two receipts also beta is remaining constant. What if you will receive 5 lakhs in the first year, guys, nothing in the second year, 5 lakhs in the third year, 5 lakhs in the fourth year? This will not be a case of annuity. What if you're receiving 5 lakhs, 6 lakhs, 7 lakhs, 8 lakhs? No, this is not a case of annuity. यहाँ पे cash flow constant नहीं है, यहाँ पे time gap is not constant, guys. Here cash flow is constant as well as time gap between two receipts or payment is also constant. Now there are two types of annuities. You do not have to learn. मतलब वापस बोल रहा हूँ guys, this is not CA foundation. This is CA intermediate. The concepts are relevant. There will not be any MCQs based on this. The two types of annuities that you have learned. One is annuity regular. The other one is annuity due or immediate. If cash flows arise at the beginning of each period, it is called as annuity due or immediate. If cash flows arise at the end of each period, it is called as annuity regular. By default, it is annuity regular and not annuity due or immediate. Or what we should be concerned about, guys, is annuity regular only. We will not even be using the word annuity, guys. I will simply write present value of cash flows. If the cash flow is same, you will directly use the formula of annuity to arrive at the present value. We're not even going to use the word annuity anywhere. समझ में आ रहा है नहीं आ रहा है? What is the difference between annuity regular and annuity due or immediate? If these cash flows that you're receiving, guys, is at the end of year 1, end of year 2, end of year 3, end of year 4, it will become annuity regular. If it is at the beginning of each year, it will become annuity due or immediate. That's the only difference, guys. It would make a difference in present value if it is at the beginning of each year and at the end of each year. They say if you're depositing some money in a bank at the end of each year, you will not receive interest for that year. Let's say you're depositing something better in the end of 2025, that is 31st December 2025. Will the bank give you interest for the year 2025? No, you will obviously start receiving interest from the next year. But if you deposit something on 1st of Jan 2025, will you receive interest for 2025? Definitely yes. So that is the difference between annuity regular and annuity due or immediate. Any doubt in that part? Now, we did present value factor. The next one that we have beta is present. I'll come back to annuity again, don't worry. The next one beta that we have is present value annuity factor, PVAF. Present value annuity factor is the present value of 1 rupee that you are going to receive every year for a specified period of time. What we did yesterday was present value of 1 rupee receivable only once. Now we are going to receive 1 rupee every year for a specific period of time. Let's say that you're going to receive 1 rupee at the end of first year, 1 rupee at the end of second year, 1 rupee at the end of third year, 1 rupee at the end of fourth year, and the rate of interest beta is 12% per annum. जरा control. क्या लग रहा है देखो fastest fingers खेल रहा हूँ मैं. Yes guys. So rate of interest is 12% and we are going to receive 1 rupee at the end of every year for the next 4 years. If this was not present value annuity factor and this was a case of only present value factor, guys, what will be the present value of the first 1 rupee? You'll write 1 rupee divided by 1.12. Yes or no? Whole power 1. Sorry guys. The present value of second 1 rupee, guys, will be 1 rupee divided by 1.12 whole power 2. The present value of the third 1 rupee will be 1 rupee divided by 1.12 whole power 3. Next, 1 rupee divided by 1.12 whole power 4. Hi, guys. Now start beta. If you have GT on the calculator, 1.12 divided by twice, press equal to 1.12 divided by twice, press equal. Calculator कहाँ है तेरा? एग्जाम हॉल में भूल गया. तू बोल बेटा. This is present value factor for the first year. Meaning if you deposit 0.8928 today, you're going to receive 1 rupee after 1 year. When you press equal to again, you get second year factor. And that is 0.7972. If you deposit 0.7972 today, you're going to receive 1 rupee after 2 years at an interest rate of 12%. You press equal to again, you get 0.718. If you deposit 0.7118 today, you're going to receive 1 rupee after 3 years. Press equal to again. 6355. You deposit 0.6355 today, you're going to receive 1 rupee after 4 years at an interest rate of 12%. After this, if you press GT, which is the total of all of this, you will get 3 point. If you deposit 3.0373 today, you're going to receive 1 rupee every year for the next 4 years. This 3.0373 is called as the present value annuity factor. Alright guys, a couple of you must have used it in CA Foundation. The ones who did not use it better understand it this way. This is present value annuity factor. If you deposit 3.0373 today, we are going to receive 1 rupee every year for the next 4 years. Is that clear? How the calculation works better is simple. We have a deposit of 3 point. The balance that we have in the account is 3.0373. We are depositing that today. The banker is going to give us interest at the rate of 12% on that. On your calculators, better press add 12% to this. 3.40. You are withdrawing. How much are you receiving out of it? The balance in your account will come down to 2.4018. A little approximation error, beta, theek hai. समझ में आ रहा है? I repeat, the balance in your account will come down to 2.4018. वो minus 1 rupee क्या है? We are interest card. We are receiving 1 rupee back as such beta from the banker. For the next year, the banker is going to give you interest only on 2.4018. On that, the banker is going to add 12%. How much will that be? 690 minus 1. The balance will come down to 1.6901. Next year, beta 1.6901. On that, you will add another 12% again. 1.89 minus 1 guys, 0.8929 or 8928. On that beta, the banker will give you interest at the rate of 12% for the last year. 9991 rupee guys, minus 1, that is 0. The account will close. The balance along with an interest of 12% will become 1 rupee. You're going to withdraw that 1 rupee at the end of 4th year guys, and the balance will come down to 0. This is how the calculation would work. Are we all understanding this? Yes or no? Everyone understood what is the meaning of the word present value annuity factor? Present value factor is you're going to receive 1 rupee at the end of a specified period. You're computing the amount of deposit that is required to receive only 1 rupee. Present value annuity factor beta is wherein you're receiving 1 rupee every year for a specified period of time. It can be 10 years, it can be 15 years, it can be 20 years. How do you compute that beta? Is you normally compute all the present value factors equal to dabate jao. In the end, press GT, grand total. It will add up all of those values. The ones who do not have GT on your calculators, you will have to use M plus. Every time you press equal to, you will also have to press M plus. In the end, MRC. That will add up all of those present value factors. Are we clear about this? Compute annuity factor at 11.5% for 5 years. Compute present value annuity factor at 11.5% for 5 years. 1 second. Direct entry students will answer obviously. ऊपर से ऑन है वो? हाँ. Yes, kids. Venkat Abhishek. 3.6499. You will press 1 point, matlab you'll type 1.115 beta divided by twice, press equal to how many times? When you press equal to for the first time as such beta, you will get present value factor for the first year. When you press equal to again, you get second year factor, so on till the 5th year factor. In the end guys, when you press GT, grand total, what do you get? The summation of all of those present value factors. समझ में आ रहा है नहीं आ रहा है? And that will become present value annuity factor. Any doubt in this part guys? Understood? So how do you interpret this value of 3.6499? If you deposit 3.6499 today, you're going to receive 1 rupee every year for the next 5 years, provided the rate of interest is 11.5%. We use this present value of annuity, guys, in order to compute present value of uniform cash flows. The question will tell us that we can invest in a machine and that will help us generate a cash flow of 50,000 every year for the next 8 years. So you know that the amount of cash flow is constant. The time gap between two cash flows is also constant. Will that become a case of annuity? We are not going to mention that it is annuity. We will simply write beta present value of those cash flows will be equal to 50,000 into present value annuity factor at whatever is the rate of interest, guys, for 8 years. Annuity factor is the present value of 1 rupee receivable every year for the next 8 years. Instead of 1 rupee, I'm now computing present value of 50,000. So that will be 50,000 times whatever is the amount of money that you need to deposit. So to receive 1 rupee every year. Guys, ye example mein beta, this is what to receive. Now let's say instead of 1 rupee, guys, you have to receive 50,000 every year for the next 4 years. What will be the amount of deposit required? 50,000 multiplied by 3.6499. Rate वो 11.5% for 5 years. बेटा अगर मैं वो if I talk about 3.6499, am I referring to 11.5% for 5 years? अगर तुम मेरे को पूछे वापस सर व्हाट इज द रेट ऑफ इंटरेस्ट एंड टाइम पीरियड, बेटा 7 खून माफ होते मेरे केस में भी. 3.6499, guys, is the present value of 1 rupee receivable every year for the next 5 years, provided the rate of interest is 11.5%. So if you were to receive 50,000 rupees every year for the next 5 years, the present value of that will be 50,000 multiplied by, how much is that, beta? 82,000. So if you deposit 1,82,495 today, you will receive 50,000 every year for the next 5 years at an interest rate of 11.5%. Any doubt in this? Whatever calculation you just did was for present value of annuity regular. ठीक है, ये जो annuity factor है ना बेटा, this is all for regular only. When I compute 1 rupee present value, did I not take 1 rupee at the end of first year, at the end of second year, at the end of third year? So all the calculations by default are for annuity regular, not for annuity immediate or due. जो भी रे भाई समझ में आ रहा है नहीं आ रहा है? Write this heading, guys. Annuity. Side heading लिखो बोला, बाजू वाले से परमिशन लेने के लिए नहीं बोला. Annuity. Annuity is a series of cash flows. क्या बेटा मानवी सब ठीक है ना? अक्ल घर पे छोड़ के आई आज. अक्ल घर पे छोड़ के आई. अक्ल घर पे छोड़ के आई क्या? Annuity, guys. वो क्या होता है ना, क्लास के स्टार्टिंग के 2-3 दिन में इट्स नॉट अबाउट व्हाट आई से, इट्स मोर अबाउट सबके सामने बोल रहा है ये. Yes, guys. Annuity is a series of cash flows. Is a series of cash flows where the cash flow remains constant. Where the cash flow remains constant. Where the cash flow remains constant. And the time gap between two cash flows also remain constant. Where the cash flow remains constant and the time gap between two cash flows also remain constant. And the time gap between two cash flows also remain constant. If the cash flows arise at the end of each year, if the cash flows arise at the end of each period, if the cash flows arise at the end of each period, at the end of each period, it will be annuity regular. It will be annuity regular. And if the cash flows arise at the beginning of each period, if the cash flows arise at the beginning of each period, It will be annuity due or immediate. If the cash flows arise at the beginning of each period, it will be annuity due or immediate. By default, by default, by default, it will be annuity regular. By default, it will be annuity regular. Annuity regular. Next बेटा ऐसे लिखो ये year 1 2 3 4. Copy the same example. The first one, guys, this part. The first one will be annuity. The second one will not be an annuity. The third one is not an annuity. Your 1 2 3 4 cash flows are given better 5 lakhs, and then 5 0 5 5 5 6 7 8. लिखे बेटा. Next heading, guys. Present value annuity factor. Present value annuity factor. This present value annuity factor, is it in respect of an annuity regular or annuity immediate? बाई तुमको इसके आगे याद रखने की जरूरत नहीं है, बट वो स्टार्टिंग में मेरे को इसलिए पढ़ाना पड़ता बिकॉज इन फाउंडेशन यू हैव लर्न रेगुलर एंड इमीडिएट, बट रिमेंबर इन सीए इंटरमीडिएट एवरीवेयर बाय डिफॉल्ट इट इज एन्युटी रेगुलर ओनली. ऑलराइट, only if you do CFA as such beta वहाँ पे they will specify separate annuity factors for annuity regular and annuity immediate. Answers would still be same, it is just that how they compute is slightly different. अपने लिए by default present value annuity factor is for annuity regular, not for annuity immediate. Right on. PVAF, it is the present value of ₹1 receivable every year. It is the present value of ₹1 receivable every year. ₹1 receivable every year for a specified period of time. For a specified period of time. Present value of ₹1 receivable every year for a specified period of time. In other words, it is the present value of, sorry, it is a sum of, in other words, it is a sum of, it is a sum of present value factors. It is the sum of present value factors. It is the sum of present value factors. All right. Head on next example. Example. ₹1 is receivable every year for the next 4 years. ₹1 is example बोल के लिखना है सबको ये. ₹1 is receivable every year for the next 4 years. Receivable every year for the next 4 years. Rate of interest is 12%. Rate of interest is 12%. So year 1, year 2, year 3 and year 4, guys. What is the cash flow of each year? CF I'll write full. Cash flow. We are going to receive ₹1. The present value of the first ₹1 will be 1 divided by 1.12. This will be 1 divided by 1.12 whole square, 1 divided by 1.12 whole cube, and 1 divided by 1.12 whole power 4. एक बार बोलो बेटा वैल्यूज वापस 0.8928 8928 नो. 7972 711 86355. Add up all the values, guys. 3.0373. How do we compute this? Is 1.12 divided by twice, press equal to. But thode calculators pe you do not have to press divided by twice. The newer calculators of all of this, the old calculators you can just divide once. Divided by equal to मतलब वो invert हो जाता. थोड़े cases में आता ही नहीं, तो you'll have to first write divided by 1 and then start pressing equal to as साथ बेटा, then you will get the value. So divided by equal to, guys, and then you'll press GT. If you do not have GT, what did I say? Every time you press equal to, press M plus, but before you start, ensure that you clear the memory. For that, you'll have to press MRC twice. By pressing MRC twice, you'll be clearing the memory, and after that, you can use this. How do you interpret this value, beta? If we deposit, likho. If we deposit 3.0373 today, add an interest rate of 12%. Very good, beta. If we deposit 3.0373 today at an interest rate of 12%, we will receive 1 rupee every year for the next 4 years. We will receive 1 rupee every year for the next 4 years. We will receive 1 rupee every year for the next 4 years. समझ में आ रहा है? If we deposit 3.0373 today at an interest rate of 12%, we are going to receive we will receive 1 rupee every year for the next 4 years. Copy this table better. This is just to understand how it works. हो गया guys? Are you all clear about this? Next better. What if it is present value annuity factor, guys, at 13% for 5 years? Can you compute? Present value annuity factor but at 13% for 5 years. If you're already done with it, relax. ठीक है Lakshita? We'll write 1.13 divided by twice, press equal to 5 times the साथ बेटा and then press grand total GT. 3.5772. 5172. If you deposit 3.5172 today at an interest rate of 13%, you will be receiving 1 rupee every year for the next Are we all clear about this better? Any doubt in this? Yes or no? लिखो ये notebook में. Present value annuity factor guys at 12.5% for a period of 9 years. डांस करते करते कैलकुलेट मत करो. फाइव पॉइंट 5.2285. Again, the same interpretation. If you deposit 5.2285 today, beta, we are going to receive 1 rupee at the end of every year for the next 9 years at an interest rate of 12.5%. Are we all clear about this? हो गया सबका यहाँ तक? Next, guys. Side heading: present value of annuity regular. What we did was only annuity factor, but now we are writing present value of annuity regular, guys. So we know present value of annuity factor beta is what? Present value of 1 rupee receivable every year. Yes or no? So in order to arrive at 1 rupee receivable every year, guys, if you were to arrive at the present value of some cash flow of annuity, what will you write? Annuity amount into present value annuity factor. Let's say beta that the present value annuity factor at 13% for 5 years is 3.5172. This means beta this is the present value of 1 rupee receivable for how many years? 1 rupee receivable, guys, every year for 5 years. If I ask you to compute the present value of 50,000 receivable every year for 5 years, the answer beta would be receivable every year for 5 years. You're going to write 50,000 multiplied by 3.5172. 1 lakh. So if you deposit 1,75,860 at an interest rate of 13%, you will receive 50,000 every year for the next 5 years. Are we all clear about this? So the formula is very clear. It is present value of annuity is equal to annuity amount multiplied by present value annuity factor. सबको आ रहा है ये समझ में? Yes or no? Is everyone clear about computation of present value annuity factors? Copy this part also, guys. Present value of annuity regular. हो गया बेटा सबका ये? Now another example, guys. Let's say, guys, an investment will result in a cash inflow of, will result in a benefit of 45,000 every year for the next 8 years. For the next 8 years. Interest rate is 15.5% per annum. Compute present value. Some investment will give us a benefit of 45,000 rupees every year for the next 8 years. The rate of interest is 15.5%. You're supposed to arrive at the present value of this annuity. हो गया? लिख लो question, लिख लो notebook में. वहाँ पे. Because the cash flow is remaining constant every year as such, guys, you're simply going to write present value will be equal to what? 45,000. Time pass karna hai to you can discount each 45,000 separately as such, guys, or you can also directly multiply this 45,000 with present value annuity factor at 15.5% for 8 years. How will you compute that present value annuity factor at 15.5% for 8 years? You will write 1.155 press divided by twice equal to how many times? 8 times, and then grand total. शशांक आ गया देखो कितना है प्रेजेंट वैल्यू एन्युटी फैक्टर 5.569. You took the interest rate as 15.5%. Are you all getting 5.569 or 4 point something? 4.2145. 4.4145. कर बेटा शशांक वापस. I'm waiting. Did you write 1.155? कैलकुलेटर भी धोखा देता है बेटा. हाँ 4.4145. What's the present value beta after you multiply? 600 and so if you deposit 1,98,653 today at an interest rate of 15.5%, you're going to receive 45,000 every year for the next 8 years. Are we all clear about this present value of annuity? Yes or no, guys? हो गया सबका ये? हसन हुआ? क्या लिख रहा है फिर? लक्ष्य क्या अभी नहीं हुआ? तुम लोग सब हो गया बोल के क्या लिखते रहते बे? हाँ लिख बेटा आराम से लिख. Read the next side heading, guys. Perpetuity. You don't need to know the present value of annuity immediate. I'm not explaining that now. It's not required. If required, we'll do it later. Okay? The next highlighting, guys, is perpetuity. Patil, what do you understand by perpetuity? Guess तो कर वे कहते no idea कहते. Perpetuity कुछ तो relate कर. जिंदगी का सवाल है समझ. लक्ष्य, what is perpetuity बेटा? याद नहीं है, मतलब पढ़ा था पहले कभी. All right, guys, pay attention बेटा. Perpetuity is a series. The word perpetual means something that will exist forever. That is perpetual. At least वो सुने कभी? हाँ? किससे सुना बेटा perpetual? हाँ? So when you say perpetuity as such, guys, it is a series of cash flows that will arise forever. There is no defined endpoint. A lot of instruments in real life, guys, will be perpetual instruments. Just if you talk about equity share, an equity share of a company does not have any redemption period. ठीक है? You know what is equity share? अरे नहीं यार, तुम लोग कुछ भी बोल के कभी भी कुछ भी बोला ना सर, डायरेक्ट एंट्री याद है ना बोल के कुछ तो बोलते सडन में, इसीलिए. Do we all know what is an equity share? Shlok, do we know what's an equity share? हाँ. So an equity share, guys, is a perpetual security. It will remain in existence as long as the company is in existence. There are provisions of buyback. We will learn that under accounts as such, guys, as and when I do it. but abhi ke liye beta it will remain in existence forever. So the cash flow that you get from investment in an equity share will become a perpetual cash flow. It is not something that will arise only for 1 or 2 years or such beta. It will arise forever. Are we clear about this? Likewise, there can be debentures as such beta which are perpetual instruments. There can be preference shares which are perpetual instruments. Whether or not it is permitted under Companies Act is a different story. I know थोड़े weird लोग रहते हैं. I will have to cover everything better. Debentures, perpetual instruments is possible under Companies Act. Preference shares at present is not possible. But can I talk for some time? So there can be instruments as such guys that can remain in existence forever. So to value them, you should know how to arrive at the present value of a perpetuity. There are two types of perpetuities beta that we cover. This concept of perpetuity is very important guys, because throughout the syllabus you will have a lot of questions related to equity. Jahan pe bhi equity aa raha hai, perpetuity is coming into picture. There's one chapter called as dividend decisions, entirely based on this perpetuity formulas. Under the cost of capital chapter that I'm doing next, even there we will be using this. ठीक है? So there are two types of perpetuity. One, where the cash flows remain constant. The other one beta, where the cash flows increase at a constant rate. The cash flows keep increasing at a constant rate, or the cash flows are constant. Now talking about, समझ में आ रहा है क्या बोल रहा हूँ? Constant perpetuity में the amount of cash flow that you're going to receive every year will remain. Let's say beta that you're going to receive 10,000 in year 1, you're going to receive 10,000 in year 2, you're going to receive 10,000 in year 3, and this will continue for life guys. Zindagi ke baad bhi. Next generation as such guys will keep receiving 10,000. Let us say that the interest rate as such beta is 12%. The present value guys of the first 10,000 would be 10,000. I do not want the value. Thank you. Will be 10,000 divided by, you do not even have calculator, still 10,000 divided by 1.12. What will be the present value of the second 10,000? 10,000 divided by 1.12 whole square. The third 10,000 beta will have a present value of 10,000 divided by 1.12 whole cube. This is going on forever beta. Remember, this will be till infinity, undefined. When you add all of these values guys, we are basically adding. If it was for 10 years, I could have simply written 10,000 into present value annuity factor at 12% for 10 years. If it was for 20 years, I could have written 10,000 into present value annuity factor beta for 20 years. For 100 years, you can compute annuity factor for 100 years and multiply by 10,000. But that will still be a very close approximation of present value per. If you take 100 years guys and then discount it, that is as good as present value of perpetuity only. The difference will be marginal. It will almost be equal to present value of perpetuity. So here beta, you're trying 100 years. Here we have 10,000 divided by 1.12, 10,000 by 1.12 whole square, 10,000 divided by 1.12 whole cube, so on. There's something called as geometric progression as such guys, that was not covered as a part of CA foundation only. That was also covered as a part of 11th and 12th math. So whether you are from direct entry system or not as such guys, it is not going to make any difference. Formula derivations are not important guys. It's just that if you understand it, it is good only. ठीक है? नहीं याद करना है कैसे आया, भाड़ में जाने दो बेटा. Load लेना ही नहीं. Just remember the end formula, get done with it. गधो हाँ कहते. There's something called as sum of infinite terms guys that we have learned under geometric progression, which will be first term divided by 1 minus common ratio. वो फॉर्मूला कैसे आया बेटा? अप्रैल में फाउंडेशन स्टार्ट कर रहा हूँ वापस. आ जाओ, बैठ जाओ क्लास में, ठीक है? 10,000 divided by 1.12 is my first term. ये देखो first term दिख रहा है? अरे नहीं बेटा, तुम लोग ढूंढ रहे थे कहाँ से लिख रहा बोल के, ये वो ऊपर वाला बेटा first term. Common ratio guys is the ratio of any two consecutive terms. Second term divided by first term, third term divided by second term, and so on. My common ratio here is 1 divided by 1.12. If you divide second term by first term guys, you will get 1 divided by 1.12. You take an LCM here guys, you will get 10,000 divided by 1.12 whole divided by 1.12 minus 1 by 1.12. उड़ा दो. you will be left with 10,000 divided by, which is cash flow divided by R%. Therefore, the present value of a constant perpetuity is cash flow divided by R%. If your cash flow, beta, CF matlab cash flow. If your cash flow per annum is 50,000 and the rate of interest is 8%, the present value of constant perpetuity will simply be 50,000 divided by 8%, 6,25,000. Are you getting the point? If the cash flow beta per annum is 10,000 and the rate of interest is 12% per annum, the present value will simply be 10,000 divided by 12%, 83,333. So the formula is cash flow divided by R%. That will become the present value of a constant perpetuity. Are we all understanding this? Yes or no? Doesn't matter, guys. Where are we computing present value? It will always be the present value of all the cash flows that are arising on a later date. Single cash flow agar hai, multiply that single cash flow with the present value factor. If it is series of cash flows, but it is not an annuity, you will have to multiply each cash flow separately with the present value factors. If it is series of cash flows and they're all the same, you can directly multiply by annuity factor. And if it is a perpetuity, then you can directly write cash flow divided by R%. We are not concerned with computation of accumulated balances. I already told you the other day, guys, when you talk about valuation of some instrument, you will always talk in present value terms. You will not talk in future value terms. So we are not going to use any future value formulas here. We are only going to use present value. Is समझ में आया क्या है? So the present value of a constant perpetuity beta will be cash flow divided by R%. Any doubt in this? Now, what if it is a constant growth perpetuity? I know you already know the formula, guys. जरा 2 minute. Pretend that you're learning it for the first time. इसका मतलब ये नहीं होते कि हाँ ऐसा क्या बोल के बोले. When you say constant growth perpetuity, guys, थोड़े लोग रहते हैं बेटा नौटंकी. You know, ऐसे start बोलते कि तमाशा शुरू कर देते. Constant growth perpetuity, already told you guys that cash flows keep increasing at a constant rate year after year. Let us take the same example, guys. Earlier I took a cash flow of how much? 10,000. Let's say that your cash flow of the first year is 10,000. Thereafter, it will keep increasing at a rate of 8%. मतलब second year का cash flow कितना हो जाएगा? 10,000 plus 8%. Can I write into 1.08? Yes or no? 10,000 beta plus 8% of 10,000. You take 10,000 common, you will get 10,000 into 1.08. Cash flow of the third year beta, I can write 10,000 into 1.08 whole square, so on. Yes or no, guys? So year 1 beta, are you all following backbenchers? मतलब पूरी class beta, हाँ. Jayant, is everyone listening? Sure beta. Keep messaging. He keeps telling me beta कौन क्या कर रहा है बोल के पीछे होता है. So cash flow of year 1 beta is 10,000. Cash flow of year 2 is 10,000 into 1.08. Cash flow of year 3 is 10,000 into 1.08 whole square, so on. It will keep increasing at the rate of 8%. The present value of that beta, what did we take the discounting rate as? 12%. The present value of the first 10,000 will be 10,000 divided by 1.12. Second cash flow का present value क्या रहेगा? 10,000 into 1.08 by 1.12 whole square. Third वाले का? Into, रुलाओगे यार तुम लोग सही में. 10,000 into 1.08 whole square divided by 1.12 whole cube, so on. Even this is in geometric progression. Sum of infinite terms in a geometric progression beta would be same formula. First term divided by 1 minus common ratio. The first term here is 10,000 divided by 1.12. Just that. The common ratio, guys, is now, if you divide the second term by first term, third term by second term, क्या आएगा बेटा ratio? 1.08 by 1.12. Earlier you had only 1 divided by 1.12. Here the common ratio is 1.08 by 1.12. If you take an LCM, guys, this 1.12 will get striked out. बचेगा क्या? 10,000 divided by 1.12 minus 1.08. I'll write that as 10,000 divided by 0.12 minus 0.08. Is that the same? Which means the formula is cash flow of first year divided by R% minus G%. This becomes the present value of constant growth perpetuity. The very important, guys, doesn't matter whether we have learned them at CA foundation level or not. It is mandatory that we understand them at CA intermediate level. There will be numerous questions. You will use this formula in the examination at least twice. There's so many things that are based on present value of perpetuity. Alright? You do not want to learn the derivation, it is absolutely fine. But understand the end formula also. This is the present value of a constant growth perpetuity, where the cash flows will keep increasing at a constant rate as such, guys, and they're going to arise forever. समझ में आ रहा है नहीं आ रहा है? If my cash flow, अपने example में cash flow of the first year was 10,000 rupees, rate of interest beta was 12%, growth rate is 8%. Present value will become 10,000 divided by 4%, 25 times 2,50,000. वही अगर growth rate of 8% नहीं था, if the cash flow is constant at 10,000 every year, the present value would be 10,000 divided by 12%, which would be 83,333. Are we understanding this? Yes or no? समझ में आ गया सबको? Please understand that when I was writing present value of constant perpetuity, I simply wrote cash flow by R%. You do not have to worry about writing 1 or 2 in the numerator, because cash flow every year is. But when you write present value of constant growth perpetuity, is very important that we write CF. ये जो 10,000 है ना बेटा, this is cash flow of year 1. How are we going to use this information? There will be few questions that will tell us company paid a dividend of 5 rupees last year. It will grow at 10%. ये जो 5 rupees dividend है, it is not first year का. It is something that has already occurred in the past. ये year 0 है. What we want is future cash flow. We are never bothered about past cash flows. If the company paid 5 rupees beta in last year, उसको हम लोग बोलेंगे dividend of year 0. It is expected to grow at what rate? 10%. My D1 beta will become 5.5. In the formula, I'm supposed to take directly 5.5. 5 rupees plus 10% of 5. But if the question starts the question with the statement beta that it is expected to pay a dividend of 5 rupees next year, that is already D1. Then you will not adjust growth rate. It is important in constant growth perpetuity that you identify whether the cash flow is of year 1 or whether the cash flow is of year 0. Year 2 से शुरू नहीं करेगा वो. He'll either start with year 0 or he will start with year 1. We want year 1 cash flow. Doesn't matter whether he's giving it for year 0 or year 1. Are we understanding this? Constant growth perpetuity में. Constant perpetuity में doesn't make a difference. If they tell you beta company pays a dividend of 5 rupees every year, क्या करना है वो D0 है D1 है बेटा. You will directly take D beta as 5 rupees. समझ में आ रहा है? With or without meditation, you will take D1, D0, everything as 5 rupees and directly compute present value. But if it is constant growth perpetuity, identify whether the cash flow is of year 0 or of year 1. You should only take year 1 cash flow in the numerator and not year 0. Are we all clear about this? Any doubt in this? Now, this formula of present value of constant growth perpetuity can be used if and only if the growth rate is less than the required rate of return. अपना R% is 12% while the growth rate is. If growth rate is more than required rate of return, it is not possible to use the formula of present value of constant. ये जो formula पढ़े तुम लोग, sum of infinite terms in a geometric progression, that holds good if only if common ratio is less than 1. Please understand we got common ratio as 1.08 by 1.12, which is 1 plus growth rate by 1 plus R. Hi Anna. For this ratio to be less than 1, growth rate should be less than. If growth rate is greater than R, it is not possible to use this formula. If you use this formula, you'll get a negative answer. But in real life, growth rate cannot be more than R. For few years, a company might grow at an exorbitant rate. For life, a company cannot grow at a higher rate. Yes, it is not a joke to grow at a rate of 30%, 40% year after year. There are entities which grow at a rate of 30-40%, but that's possible only for 5 years, 6 years, 7 years. Uske baad mein the growth rate has to stabilize. Are we clear? Large entities have a growth rate of only about 10-12% as Sath beta. They cannot continue to grow at a very high rate. Are we all very clear about this? Yes or no? समझ में आ गया सबको ये? Write down guys, citing perpetuity. Perpetuity. श्रवण कोई डिस्टर्ब कर रहा है बेटा देखो? तू किसी को डिस्टर्ब कर रहा है? नहीं. नाच क्यों रहा है बेटा? युक्ति नाच रहा है वो? पता नहीं. Not so important. I know beta. Perpetuity, guys. It's a series of cash flows. It's a series of cash flows. Series of cash flows with no defined end point. Series of cash flows with no defined end point. Series of cash flows with no defined end point. Cash flows will arise forever. Cash flows will arise forever. Cash flows will arise forever. Next line. Constant perpetuity. Constant perpetuity. Constant perpetuity is where the cash flows remain constant. Constant perpetuity is where the cash flows remain constant. Next line. Constant growth perpetuity. Constant growth perpetuity. Constant growth perpetuity is where the cash flows will increase at a constant rate. Is where the cash flows will increase at a constant rate. At a constant rate. Now, side heading beta. Present value of constant perpetuity. Present value of constant perpetuity. Present value of constant perpetuity. Constant perpetuity. Cash flow per annum 10,000. Cash flow per annum 10,000. Required return 12% per annum. ये required return क्या है बेटा? That's the very first chapter. Don't worry about it. I'll explain in a very detailed manner. अभी के लिए simply understand that as R. We'll learn how to compute that required return in the very first chapter. Just write required return 12%. Required return 12%. उसके नीचे बेटा write like this. Year 1, year 2, year 3, year 4, so on. Cash flow, CF matlab cash flow. It is 10,000, 10,000, 10,000. Present value will be 10,000 divided by 1.12. 10,000 divided by 1.12 whole square. 10,000 divided by 1.12 whole cube. And 10,000 divided by 1.12 whole power 4, so on. It is in geometric progression. First term A is equal to 10,000 divided by 1.12. Common ratio, I write common ratio as capital R so that you do not, guys, misunderstand that for small r. Common ratio यहाँ पे बेटा would be 1 divided by 1.12. The present value will be equal to sum of infinite terms, which is a by 1 minus r. 10,000 divided by 1.12 whole divided by 1 minus 1.12. Formula derivation exam में नहीं आएगा, not relevant, it is only for understanding. Minus 1 divided by 1.12, you cancel that 1.12, you'll be left with 10,000 divided by 0.12, which is cash flow divided by R%. First term is 10,000 divided by 1.12. Common ratio, guys, is 1 divided by 1.12. We got present value as sum of infinite terms. Are we all clear about this? That required rate of return. No. Implicit rate is IRR. This is different calculation. Are we all clear about this? Next, beta, present value of constant growth perpetuity. Present value of constant growth perpetuity. How will you compute the present value of constant growth, beta? Same likho वैसे. Cash flow of year 1, 10,000. It will increase annually at a rate of 8%. At a rate of 8%. That is G is equal to 8%. So cash flow of year 2 can be written as 10,000 into 1.08. Cash flow of year 3 will be 10,000 into 1.08 whole square and so on. ये CF1 CF2 समझ में आ रहा है? R is same beta, 12%. So our cash flow, guys, of year 1 is 10,000. Year 2 is 10,000 into 1.08. Year 3 is 10,000 into 1.08 whole square. 10,000 into 1.08 whole cube, so on. Present value beta will be 10,000 divided by कितना beta? 1.12. 10,000 into 1.08 divided by 1.12 whole square. 10,000 into 1.08 whole square divided by 1.12 whole cube. Whole cube divided by 1.12 whole power 4. Again, guys, the first term as such beta is 10,000 divided by 1.12. Common ratio R will be 1.08 by 1.12. You'll be left with what beta? 10,000 divided by 1.12 minus 1.08. This will be written as 10,000 divided by 0.12 minus 0.08. That is cash flow of year 1 divided by R% minus G%. రాసుకున్నారా? पूरा बचे सो है. उमंग मारना आता ना देखो, तेरे को मारना आता, लगा दे. అయిందా వెంకట్? మొత్తం అయిపోయిందా? మరి हो गया भाई इस कप का? क्या लिखता कि are we all clear about this, guys? Now beta, what did we learn so far is, एक second सुन लो. Present value, guys, of a single cash flow. You will write whatever is the cash flow divided by 1 plus r% whole power n. हाँ ना? Or that can be written as cash flow multiplied by present value factor at r% for the nth year, nth period. ठीक है? If it is present value of a series of cash flows and the cash flows are same, then you can write cash flow present value beta will be equal to cash flow multiplied by present value annuity factor. Any doubt in this part? What if the cash flows are not same, guys? If the cash flows are not same, present value will be equal to, you take cash flow for year 1 multiply by present value factor, guys, for the first year. You take cash flow of second year multiply by present value factor of the second year, and so on. You will have to compute the present value of each cash flow separately. What if this series of cash flow beta is a constant perpetuity? If it is a constant perpetuity, how will you arrive at the present value of a constant perpetuity? Cash flow divided by r%. What if it is a constant growth perpetuity? Constant growth perpetuity, guys, it will become present value beta will be equal to cash flow of year 1 divided by r% minus g%. This is what we have learned so far. Are we all clear about this? Likho beta ek bar. All of you write this part. समरी बोल के लिख लेना बेटा लास्ट में. All right, guys, are you all done with it? Start on beta examples. Example 1. Example 1. An investment will result in a cash inflow of example 1. An investment will result in a cash inflow of 95,000 rupees. 95,000 rupees. 95,000 rupees at the end of 95,000 rupees at the end of 6th year. At the end of 6th year. Required return is 15%. Required return is कितना बेटा 16 बोला 15 ना 15%. 15%. It is available at a price of 45,000. It is available at a price of 45,000. It is available at a price of 45,000. Should we buy it? Should we buy it? What will you do better is, I told you cash flows cannot be directly compared, so you will have to bring them to a common time base. We know that the price of this instrument is 45,000. You will have to compute what is the value that you're receiving out of it. When I say value that you're receiving out of it, beta, is present value of that 95,000. Is it a single cash flow or a series of cash flows? You will directly write 95,000 divided by required rate of return. कितना बोला था मैं? So it will be 95,000 divided by 1.15 whole power 6. How much will be the present value of this 95,000? 41,771. 41,071. That means normally in order to receive 95,000 rupees beta at a rate of 15%, you will be willing to pay an amount of only 41,000. But this particular investment, is it available at a lesser price or a higher price? It is overvalued. We should not be buying it. In other words, if you buy this instrument at a price of 45,000, you will not be generating a return of 15%. You will be generating a lesser return. वो कैसे calculate करना है? We will discuss later, guys. There's something called as internal rate of return. We will be learning it. But as of now, if you buy that investment at 95, our return will be less than 15%. Are we clear about this? ये लिखो बेटा, price is 45,000. While the present value of 95,000 is 41071. Price is 45,000 while the present value of 95,000 beta is 41071. तुम लोग इसको fair value भी बोल सकते हो or intrinsic value, whatever name that you would want to give. Next line. As the actual price is more than the fair value, as the actual price is more than the fair value, as the actual price is more than the fair value, the instrument is overvalued. The instrument is overvalued. The instrument is overvalued. And hence we should not buy it. We should not buy it. We should not buy it. ठीक है? That on next line. In other words, if we pay an amount of 45,000, if we pay an amount of 45,000, if we pay an amount of 45,000, the return generated will be less than 15%. If we pay an amount of 45,000, the return generated will be less than 15%. The return generated will be less than 15%. Are we all clear about this? Yes or no? Next example, guys. Example 2. Example 2. An instrument will result in a cash inflow of an instrument will result in a cash inflow of 12,000 every year, will result in a cash inflow of 12,000 every year, 12,000 every year for the next 8 years. For the next 8 years. For the next 8 years. Required return is 14%. Required return is 14%. What amount can be paid for the instrument? What amount can be paid for the instrument? Required return is 14%. For what amount can we buy the instrument, or what amount can be paid for the instrument? Beta, jo bhi likhna hai. Now, is this a single cash flow or a series of cash flows? Is the series of cash flows arising forever or for a fixed period of time? So you know it is not perpetuity, guys, it is annuity. You will have to multiply that cash flow with present value annuity factor. You know the required rate of return is 14%. It is for a period of 8 years. And the cash flow beta would be, so the value of this security will be equal to the present value of all the cash flows that you are generating. And the present value of cash flows beta will be 12,000 bola na main. 12,000 multiplied by present value annuity factor at 14% for 8 years. How much is that? 55,666. This is the maximum price that you will be willing to pay for this instrument. If it is available for a lesser price, then it is undervalued. You will definitely buy the instrument. If it is available at a higher price, it is overvalued, and we should not be buying the instrument. Are we clear about this? Any doubt in this beta? Next example. ये समझ में आया सबको? All of you should calculate beta. Do not blindly copy the end result. क्या सोच रही है बेटा? आ गया, समझ में आ गया? पक्का? You have a doubt? Third one, guys. Third example. Third example. The cash inflows from an instrument. The cash inflows from an instrument. Cash inflows from an instrument. Cash inflows from an instrument are expected to be cash inflows from an instrument are expected to be 10,000 in year 1, 12,000 in year 2, 10,000 in year 1, 12,000 in year 2, 12,000 in year 2, 14,000 in year 3. 14,000 guys in year 3, and 16,000 in year 4, and 16,000 in year 4. Compute present value. R 12%. Required return 12%. Beta, compute present value. R is 12%. Compute present value. There are uneven cash flows, guys, or you can say that the amount of cash flow is not the same every year, and hence they should be discounted separately. You cannot directly multiply by annuity factor. हर एक का present value अलग से compute करना पड़ेगा. You can multiply by annuity factor only if the cash flows remain same, constant every year. हो गया इसका प्रेजेंट वैल्यू कितना आया, मान लो अरे हो गया क्या, हाँ कितना आया, बस चल रहा कैलकुलेटर अब भी उठाए आ जाता देखो भी आ गया, आ गया गाइस 71,000 without discounting it is 10, 12, 14 and so even if I do not discount as such but and simply add all of them it is 52,000. The present value of 52,000 should be less, it should not be more. అర్థమైందా, झावर राइट, नाम क्या बेटा तेरा फर्स्ट नेम, आ गया देखो आंसर आ गया, दोस्त है तेरा, यू नो हिम बेटा, guys the present value beta is 38,628. You will write 10,000 divided by 1.12, 12,000 divided by 1.12 whole square, 14,000 divided by 1.12 whole cube, and finally fourth year cash flow is 16,000 jiska present value will be 1.12 whole power 4. The cash flows are different every year. You're supposed to discount them separately, guys. This is how you're going to arrive at the present value of all the 4 cash flows. Are we clear? Ray. Present value is 38,628. Did you all get this, guys? You can compute the cash flows separately better and add the present values. पहले फर्स्ट वाले का कंप्यूट कर लेना 10,000 डिवाइडेड बाय 1.12 एंड देन 12,000 by 1.12 whole square so on. Compute all of the present values separately and add all of those values. Is it okay if the answer differs by 50? Not okay, beta. Are you noting down individual values anywhere or did you just add up all the values directly? So you must have jumbled few numbers better when you wrote individual values. If it is 63, we write 36, like that. I'm pretty sure better you must have done. 3 decimal points of what? Present value factors. Then you'll definitely get a difference better. ठीक है. Proud of you. Next example, guys. Nabil आ गया आंसर 38,628. कैफ 635 आया. क्या मस्ती कर रहे हो यार तुम लोग. Guys, if someone is writing present value factors beta up to 4 decimal points and then you multiply, there's obviously, guys, a possibility that you might get a difference of 5-6 rupees. If someone is restricting the present value factors to 3 decimal points, क्यों मतलब ठीक है ना यार, you might get a difference of 30-40 rupees. Are we clear? Round off the present value factors to single digit. सबका closer to 1, closer to 1, closer to 1 बोल के into 1 into 1 into 1 कर दे. Good idea, no? Yes, guys. Fourth example. A company has been declaring a dividend of. Company has been declaring a dividend of 15 rupees every year. 15 rupees every year. 15 rupees every year. The required rate of return. Rashi लिखना है. The required rate of return is 14%. Required rate of return को तो R बोल के लिखती ना. Required rate of return is 14%. What should be the value of equity share? What should be the value of equity share? Equity share, I already told you. Is it a perpetual instrument? यहाँ पे is the cash flow remaining constant every year? Yes or no, guys? Because the cash flow is constant every year, how are we going to arrive at the present value of this equity share, beta? It will be present value of constant perpetuity. And we know the formula for present value of constant perpetuity, guys, is cash flow divided by R%. How much is the cash flow? 15 rupees divided by 14%. How much is this? 107.14. Are we clear? This will be the present value or the value of the equity share. क्या doubt है बेटा? तो next, guys, fifth example. A company paid a dividend. हो गया ना सबका ये? I'll wait, guys. नहीं हुआ यहाँ तक? She's still writing, no? Done, beta. Fifth example. Company paid dividend of कितना बोला? नहीं बोला ना कुछ भी. हाँ. Company paid dividend of 20 rupees last year. Company paid a dividend of 20 rupees last year. It is expected to grow at a rate of 9% every year. It is expected to grow at a rate of 9% every year. Required return is 16%. Required return R is 16%. Compute present value to 25.71. कितना बोला? How much did the company pay dividend, guys? 20 rupees. What did you do, beta? Formula क्या लिखी? 20 divided by if you make a mistake like that, beta, people will be happy. Sesha, what is the answer that you got, beta? Guys, ये जो dividend है बेटा, pay attention. This is dividend paid which year, guys? Dividend paid last year is not D1, guys. It is D0, guys. D1 will be, what was the dividend that I said? 20 rupees, no? 20 rupees. That will grow at a rate of how much? So you should consider a dividend of 21.8. Now you will write value is equal to the present value of this constant growth perpetuity. Please do not make this mistake. Are we clear about this? Present value of constant growth perpetuity. You're going to write cash flow of year 1 by R% minus G%. That is 21.8 divided by R. कितना बोला? 16% minus 9% divided by 7%. 343. So the value of the equity share beta would be 311.43 rupees. समझ में आया नहीं आया? The present value of the instrument or the value that you will be willing to pay for it will be 311.43. Any doubt in this, guys? Yes or no? Next, beta. Next example. Next example. 10% debenture of rupees 1000 each. 10% debenture of rupees 1000 each. 10% debenture of rupees 1000 each will mature in 3 years. Will mature in 3 years. 10% debenture of 1000 rupees each will mature in 3 years. Required rate of return is 13%. Required rate of return is 13%. Compute the value of debenture. Required rate of return is 13%. Compute the value of debenture. अगर आ गया ना आंसर ऑलरेडी, चिल्लाओ मत जरा, एक सेकंड, let them process the information. All the others better take your own time. I'll wait for a minute. आ गया चुड़ैल? आ गया बेटा लास्ट बेंच? Is that a yes or no? No. Last bench beta. Is it 693 point? It is not 693 points. वापस पढ़ बेटा question. Very good beta. Wrong answer. 44,000. 1000 रुपए का डिबेंचर गाइस, 1000 रुपीज के डिबेंचर के लिए कौन है जो 44,000 देगा? You noted out the question, no? We are in the 6th example. Read the question again, beta. If you are willing to pay 44,000, will all issue debentures to you? हाँ कैफ 922.4. 2 incorrect beta. That was Raghav. हाँ तू बोलेटा राघव. All the others beta keep trying. 900 point. Wrong answer. मेरे को नहीं मालूम है करेक्ट आंसर क्या है. मैं बस ऐसे ही टाइम पास करते जा रहा हूँ, अज्यूमिंग कि एक दो बच्चे जो बोले होंगे वो सही होंगे बल्कि. व्हाट्स द आंसर बेटा? Wrong answer. How will you get 693 beta? The face value of the debenture is how much? 1000 rupees. No, how can it deviate so much from 1000 rupees? Guys, it is very important as such beta that we use the most important muscle, brain. 14. I'll sell you the debenture beta. Why will you pay 1442 rupees guys to receive 100 rupees every year and 1000 rupees at the end of third year? 9, 929, 6, 960. Alright guys, pay attention beta. 960 is the incorrect answer. So first, so when you say 10% debenture of 1000 each, first you will have to understand how an instrument works. ये 10% को बोलते हैं कूपन रेट और इंटरेस्ट रेट. This is not the required rate of return. Company will pay an interest of 10% of 1000 guys. How much is that? 100 every year. For how many years will it pay? For 3 years. The company is going to pay an amount of 100 rupees every year for the next 3 years. This is what you will have to understand. Apart from that, they will have to give you back your loan amount also. Debenture matlab loan. You gave some amount to the company is going to give you back that 1000 rupees also at the end of third year. If you give a loan of 10,000 rupees to your friend and he gives you interest for 3 years guys, what should he do at the end of third year? He should give you back that 10,000 also, no? Or will you say, ठीक है ना चलता बोल के? We ignore that 1000 altogether. Company will repay 1000 at the end of third year. All you have to do beta is simply arrive at the present value of these cash flows. You are receiving 100 rupees every year for the next 3 years. If you invest in this instrument, I do not care about what is the price that you are paying today for the instrument, but in case you hold this instrument, how much will you get every year? 100 rupees for the next 3 years. Apart from that, you will get 1000 rupees at the end of third year. So the value that you will be willing to pay beta is 100 rupees multiplied by present value annuity factor at what is the required rate of return? 13% for 3 years, and 1000 rupees multiplied by present value, because you're going to receive it only once at the end of third year. This includes both annuity as well as a single cash flow. You're supposed to discount that 100 rupees separately and 1000 rupees separately. Are we all understanding this? It's first important to understand, guys, when are you receiving what? If you understand that, then it is very easy to compute present value. This question, guys, is from your CA foundation book only. Before the fourth exercise, the last question, valuation of bond. वहां पे भी पढ़ा चुका हूं. 100 rupees is the amount of cash flow that you're going to receive beta every year for the next 3 years, and 1000 rupees at the end of third year. समझ में आ रहा है नहीं आ रहा है? You'll have to discount that 100 rupees separately for 3 years. You have to discount that 1000 rupees. Whoever is getting 600 and change as such, beta, either you're not taking that 100 at all. तुम लोग सिर्फ 1000 rupees ले रहे हो. वो 10% का क्या फायदा है फिर? Isn't this a 10% debenture as such, beta? That means company will be giving you an interest of 10% of 100 rupees every year. If you are not receiving that 100 every year as such, beta, then yes, it's a single cash flow, 1000 rupees at the end of third year. Then you directly discount 1000 for 3 years. But उसको zero coupon bond बोलेंगे. What is zero coupon bond? We'll study later. As of now, not required. Are we all clear about this? So how much is the annuity factor at 13% for 3 years? When you do equal to present value factor भी बोलो मेरे को. 2.361112. और ये वाला बेटा प्रेजेंट वैल्यू फैक्टर थर्ड ईयर का 0.693031. इन दोनों का टोटल है साथ बेटा विल बिकम द प्रेजेंट वैल्यू ऑफ द एंटायर बॉन्ड. हाउ मच इज दैट? 929. Are you getting the point, guys? समझ में आ रहा है नहीं आ रहा? कैफ देखो 922 कहां से आया? क्या हुआ? किसको कंपाउंड किया? कॉपी गाइस. करेक्ट बेटा 929.16 निशांत. हाँ, जस्ट चेक द स्क्रीन. बेटा 960 तू क्या किया? ठीक है बेटा. Are we all clear about this? Any doubt in this part? Are we all done? समझ में आया सबको? అందరు చేస్తున్నారు. 1 minute. One more example, guys. Next example. We're done with the next example. Is everyone done with this? a 14% debenture of 14% debenture of 14% debenture of 500 rupees each, 500 rupees each, 14% debenture of 500 rupees each is trading at 525 rupees, is trading at 525 rupees. Should the debenture be purchased? Should the debenture be purchased? Should the debenture be purchased if the required return is 13%? If the required return is 13%, maturity of the debenture 3 years. Maturity 3 years. Should the debenture be purchased if the required return is 13%, maturity 3 years? हो गया ना? चिल्लाओ मत, जरा एक सेकंड रुको. हाँ, हो गया. नोट्स में लिख. आयुष आंसर आ गया. कंप्यूट कर लिया ना प्रेजेंट वैल्यू? दिशा कितना है प्रेजेंट वैल्यू? 514 पॉइंट. अच्छे से बोल बे. 514 guys is the present value of the debenture. 511. The present value of the bond, guys. What is the coupon rate, beta? I said 14% debenture. That means every year the company will be giving us 14% interest of 500, not as a percentage of market price. Your interest every year, beta, would be 70 rupees. You're supposed to discount this at a rate of 13%. For how many years? 3 years. Apart from that, you're also supposed to discount 500 rupees, beta, at a rate of 13% for the third year. Correct, beta? Raghav and Ekansh. How much is the present value, guys? Guys, all of you remember, beta, even if you guys are not talking, it's if you are getting disturbed as such, guys, by the people around you, you do not have to take it on a daily basis as such, guys. Just bring it to my notice. I will take care of it. Are we very clear? You do not have to bear it on a daily basis. You're coming here to study. Ensure that you study. Sometimes it is not because of our own actions. It is because of the actions of the amazing people around us that we are not able to concentrate. Bring it to my notice. I'll take care of it. ठीक है? Yes, beta. How much is the amount? 511.8. क्या बेटा डिस्काउंटिंग फैक्टर्स अलग से लिखी? 511.8 guys will become the present value of this bond. What is the current market price? Will you be willing to buy this bond at 525 rupees when the fair value of the bond is only 511.8, guys? No, you should not be buying the bond at a price of 525. Are we clear? Can I discuss one more example related to equity as such, guys? Just one step forward. मतलब ये सब examples है भी. ये समझ में आ गया सबको? Right on with the next example. Is everyone clear about this computation? Last bench, Yash, right? हो गया है? Next example. कौन सा है बेटा next example number? 8th example. A company paid a dividend of company paid a dividend of 10 rupees last year. company paid a dividend of 10 rupees last year. It is expected to grow at a rate of 15% for the next 4 years. 15% for the next 4 years. 15% for the next 4 years. And thereafter at 8%. Thereafter at 8%. 15% for the next 4 years and thereafter at 8%. Required rate of return is 12%. Required rate of return is 12%. Now the new thing that we will be learning here beta is that the growth rate is not constant. If you recall the concept, we did present value of constant perpetuity. We will be redoing this topic beta or this particular example multiple times in multiple chapters. बहुत जगह आने वाला है ये. So present value of constant perpetuity applies where the cash flow is constant every year. You will directly write CF divided by R%. Present value of constant growth perpetuity formula applies if the growth rate is constant. यहाँ पे the growth rate is stabilizing or the growth rate will become constant after the. There is no way beta that you write value today. When I write V0, it means V0. मतलब today's price. V0, if you write D1 by R% minus G% cannot be written. Why can't I write D1 by R% minus G%? Growth rate is not constant. Alright guys. ऐसे सोचो बेटा that this information is from the year 2025. ये year 0 है. Year 2026 is year 1. Year 2027 is year 2. 2028. Year 4 2029. I cannot compute P0. I cannot write P 2025 is equal to D 2026 by R% minus G% because growth rate is not constant. But is the growth rate stabilizing after 4 years? I can definitely write P4 as D5 by K minus G. Do not get confused by 4 and 5. ऐसे सोचो, if I am computing price at the end of 2029, my first dividend will be 2030. If you are computing price at the end of 2025, your first dividend will be 2026. If you are computing price at the end of 2026, your first dividend should be 2027. So if the growth rate is constant guys, right from the first year, I could have written P 2025 as D 2026 by R% minus G%. I can write P 2026 as D 2020. Are you all following? Nandini, what's the doubt? P 2027 data will be written as P D 2028 by R% minus G%. ऐसे you can write it better for any number of years. But यहाँ पे growth rate is not constant for the first 4 years. The earliest I can use constant growth perpetuity formula is only at the end of 4th year. Sir, can we do it at the end of 5th year? Happily karo beta, no problem. Can we do it at the end of 6th year? Happily do it. Once the growth rate is constant, you compute price using that formula guys. At the end of any year, chalega. But I cannot do before that 4th year period because the growth rate is not constant. This is why you should know that the formula is based on geometric progression, and geometric progression says ratio should remain constant. One formula itself is not applicable. If the ratio is not constant, you can never apply that formula of CF1 by R% minus G%. Are you all getting the point guys? These are the common cases that will come across in a lot of questions. Growth rate will never be constant. You pick up the valuation of any company guys. They will assume a higher growth for the first 10 years. Then after they will assume that the growth rate will stabilize. That means I cannot directly use constant growth perpetuity formula in year 0 only. I will use constant growth perpetuity formula at the end of 10th year. वो जो example बोल रहा हूँ. If they give me cash flows for 10 years better and then say cash flows will remain constant or they will grow at a constant rate. Every company will have a high growth period. Then the growth rate as such beta will start reducing and then the growth rate will stabilize at a lower rate. अभी वही बोल रहा था. I said high growth rate is not possible for life. Even if a company is growing at a higher rate, it will only be for a couple of years. थोड़ी देर पहले याद है बोल रहा था that you cannot use this formula if growth rate is very high. So यहाँ पे बेटा I cannot write P naught, I cannot write P1, P2, P3. What can I start with? P4 will be equal to what? But sir requirement तो P naught है. Once you compute P4, you know that you did not include D1, D2, D3, D4. Compute the present value of D1, D2, D3, D4 and P4. P4 will take care of dividends from the 5th year. When I write P naught beta, P naught is the present value of which year dividends? D1, D2, D3, D4, D5, so on. Yes or no? P1 अगर लिख रहा हूं, it will be present value of, it's all future cash flows. Year 1 के end में अगर price compute कर रहे हो बेटा, you will include cash flows from second year. It will be present value of D2, D3, D4, D5, so on. Can't I write P naught as present value of D1 and P1? P1 is including dividends from the second year. The only thing that is not included in that is D1. So compute the present value of D1 and P1. You will still get the same answer. Are we clear about this? Second या third या fourth example. Did we take constant growth perpetuity formula बेटा? Fourth example था ना ऊपर वो? हाँ या ना? In that, what was D naught? 20 rupees. D1 was? R was how much? Growth rate was? ठीक है? We all computed P naught beta as D1 divided by K. Sorry बेटा वो. K कल 2 दिन बाद में से will start using K. अभी के लिए R%. Once I start cost of capital chapter. अभी के लिए let's just use the word R%. 21.8 divided by 16% minus 9%. कितना हो गया बेटा ये? 311 point. सुन जूते खाएगी. D2 guys. Can I write D2 as 21.8 will grow at a rate of 9%? How much is that? D1, if grown at a rate of 9%, will become D2. 20,762. What I was trying to tell you is P1 will become D2 by R% minus G%. Won't P1 be D2 by R% minus G%? P1 मतलब क्या? Price आज के दिन पे और after 1 year? After 1 year. If you're computing price after 1 year, from which year should you take dividends? From second year. That is why it is D2 by R minus. Guys, ये 1, 2 की जगह अगर तुम लोग year लिखना शुरू करें ना, zero confusion रहता. But in the books we cannot write year. If I am computing P 2024, the formula is D 2025. If I am writing P 2025, it will be D 2020. Common sense. That's it. So if I am writing P1, it should be next year, that is P2. So that will become 23.762 divided by 16% minus 9%. 339.46. Now guys, I also told you that I can write P naught as present value of D1 and P1. P1 will take care of dividends from second year. The only thing that is not included is D1. D1 मेरा 21.8 है, P1 मेरा 339.46 है. इसको 1 year के लिए डिस्काउंट करो. Just 1 year. This is not perpetuity or anything. These are both the items that are coming at the end of first year. How much will you get? This is what we directly got P naught as 311.43. I'm just trying to prove the relation, guys. Whether you directly write P naught is equal to D1 by K minus G, R minus G, or whether you write P naught as present value of D1 and P1, the answer is not going to change. You all understood this? Yes or no? Let's go one step ahead better here. D2, D1 कितना था? 21.8. D2 was 23. How much will be D3, guys? Increase this by 9%. 25.9005. If I want to compute P2, guys, will that become D3 by R% minus G%? हाँ या ना? So that will be 25.9 divided by 16% minus 9%. Use the calculators बेटा. जिसको बोल रहा था उनको बोल. 37.01 guys. I can also write P naught as present value of first year dividend, second year dividend, and P2 will take care of dividends from which year? Are you clear about this, guys? First year dividend is at the end of first year, so it will be discounted only for 1 year. D2 and P2 are at the end of second year. It will be discounted for how many years? Can you compute this? Calculator మీద చేసి చెప్పు. నాకు కూడా తెలుసు ఆన్సర్ అదే వస్తుందని. Calculate करो बस. All of you calculate this, guys. $311. You will always come back to the same answer. Whether you write P naught as D1 by R minus E, or whether you write P naught as present value of D1 and P1. Whether you write P naught beta as present value of D1, D2 and P2, D1, D2, D3 and P3, D1, D2, D3, D4 and P4. Answer is not going to change. But in the example that I told you now, iske pehle, I cannot write P naught is equal to D1 by R minus G because growth rate is not constant from year 1. Growth rate is constant only from. You will have to use this knowledge to see how can you compute price in that case. Growth rate is becoming constant after the 4th year. If not P naught, can I at least compute P4 using the formula of constant growth perpetuity? I can write P4 as D5 by KE R minus G. वो आदत है बेटा, वो D बोलते कि KE आता है. वो KE का मतलब होता है cost of equity, that is required rate of return on an equity instrument. We will talk about that. So as of now, D5 by R minus G. But we want P naught. How can I compute P naught using P4? Present value of P D1 and P4. समझ में आ रहा है नहीं आ रहा है? Just to mess around the साथ बेटा, once in CA final is long back, he gave growth rate is 20% for the next 20 years. Thereafter it will stabilize at 8%. Just to mess around. All you have to do is just write 20 dividends and then write price at the end of 20th year and then discount all of those 20 dividends and price at the end of 20th year. समझ में आ रहा है नहीं आ रहा है बेटा? What if I just given a test beta, the dividends will grow at a rate of 30% for the next 50 years and thereafter beta it will stabilize. Okay, what will you do? You'll have to discount all the 50 dividends separately and price at the end of 50th year, or you just leave the question, guys. Are we clear about this? नहीं देगा बेटा 50 years, वो 20 years भी सिर्फ एक ही बार आया, उसके बाद में गायब हो गया. They never give all of that in the exam. 7-8 years is normal in CA final, but they will never go beyond that period. And that 7-8 years maybe present value factors, everything are already given in the question, so it is dead easy to get the answer. Alright guys, are we all understanding this? So क्या सीखे बेटा? Whenever there is a high growth period initially followed by a stable growth period, you cannot directly arrive at P naught. You can compute price by considering the period, guys, during which the growth is constant. If the growth rate is stabilizing after 6 years, you will be able to use constant growth perpetuity only to compute P6 or a later price, because the growth rate is stabilizing after 6 years. If the growth rate is stabilizing after 10 years, you compute P10. If the growth rate is stabilizing after 15 years, you compute P15. उसके बाद में एक कैश फ्लो अलग से डिस्काउंट करना शुरू करो. That is how you compute P naught. Pretty important, keeps coming in the examination normally, but then very easy to understand if you know how that discounting works. Are we all clear about this? Any doubt in this part? Sure guys? Chalo beta, we'll write all of this tomorrow, end of the session. See you guys tomorrow. Do not forget guys, from tomorrow the classes will be from 7 o'clock. Chalo. 6:15 कौन है बे? यहीं पे सो जा खदे. Online students, end of the session. See you guys tomorrow. Beta bye bye.